Good morning. My name is Malcolm Graham Wood, and today it's again my privilege to be conducting a CEO interview. And this morning I'm delighted to welcome back Tony Durrant, who's the CEO of Premier Oil. We were working out it was about 18 months ago.
Absolutely.
That you came in last, and it's been a pretty hectic old 18 months, but particular this year. Obviously, the first question I'd like to ask you is to give us an idea that really hectic year that you've just had. What have you been up to? Give us the highlights and the lowlights.
Absolutely. Good morning to you, Malcolm, and nice to be back.
Thank you.
Yes, it's hard to believe actually that it's only 6 months since we saw sub $30 oil, and a lot seems to have happened already in that last 6 months. You wonder where we might be in 6 months' time. Obviously, we can't really control the external world. So we've, I think, concentrated on our own operations. Had a very successful first half with very high uptime, good production from just about all our fields. And during that first half, we also brought on new production from Solan, which is now boosting our production level significantly. And we also completed the E.ON acquisition, which was done really at the very bottom of the market back in February, completed in May. So again, more production there. And today we're producing around about 80,000 barrels a day, significant step up from last year, with a lower cost base. So all going pretty well operationally, doing what we can really to maximise cash flow.
Excellent. So, and Catcher we'll come back to in a minute. That's progressing, and costs, which we'll come back to later as well. So on production, you mentioned that, I noted that you've consistently beaten the targets that you set yourself. Yeah. And I don't think you've set yourself, too low targets. I don't think it's a question of that. It's just that they consistently come in. And you had an upgrade at half-time to 68 to 73,000 barrels a day, which presumably as you're increasing, you mentioned 80,000 barrels a day. As you go into the new year, you'll probably be upgrading that as well. But the production you're confident on and looking happy at.
Yes, very much so. We had uptime in the first half, production efficiency, as it's called in the industry, of over 90%, which,
really good going.
Shell used to have a 90% target, so that's not too bad at all. And that's really the principal reason, I would say, for the upgrade that we announced in August at our half-yearly results. Since then, pretty steady. We've come through the summer maintenance program, good performance from some new assets. So 68 to 73 is still our production guidance today, but we'll give an update on that at our November trading update.
Great. So tell me, Catcher. I'm looking forward to this because it probably you're going to be in line with the existing expectations. Tell me how.
Yes, and of course the industry has suffered, especially perhaps in the North Sea, from too many projects that have not met budget and schedule. But fortunately, Catcher, we're in a good place today. There's still a lot of work to do, but development drilling has gone well. We're ahead of schedule. We're under budget there as well, and the development wells have been coming in above prognosis. The subsea installation program has been completed, so we're something like a year ahead of schedule on that. The focus is now on the FPSO in Keppel's Yard in Singapore, which is quite a sight. There's about 2,000 people working on that boat at the moment.
Is it a 400-foot boat, did you call it?
Well, 287 metres actually. So there's a bit of room, but still 2,000 people is a lot. The topside modules are being loaded on. We've got miles and miles of wiring to do, but we're some 9 months away still from the anticipated sail away date. And even if we take all that 9 months, we'll still be in good shape, I think, for the fourth quarter of 2017, which is the anticipated first oil date. So perhaps a little bit of contingency still in the schedule there. Working very hard to keep it in a good place.
And it's going to come in below budget?
It certainly is. The original budget was $2.2 billion for the whole project. Premier has half of that. The latest public estimate we've given is $1.8 billion. We are benefiting from release of contingencies, as I mentioned, and we're also benefiting from the sterling exchange rate, which, looking at the screen, Malcolm, seems to be going lower.
I noticed yesterday.
Yes, we're pushing hard to come in with further savings in the next 6 to 9 months.
Good. While we're on costs across the board rather than just at Catcher, you brought operating costs down significantly in the last couple of years. Have you got further reductions up your sleeve, or how's that going to pan out?
Well, again, the sterling exchange rate is helping. I think 60% of our costs in the North Sea, for example, are in sterling. So in dollar terms, that's making them cheaper. I think there's an awful lot of work going on in the industry to try and make us more efficient as an industry. Industry collaboration is probably the buzzword of today. I have to give some credit actually to the government. Usually you get the oil industry bashing away at the government, but I don't think that's the case at the moment. I think that the OGA, their powers have just been formalised in the last week or so, have been doing a good job and helping really to bring industry together and find better ways, more efficient ways of running our fields in the North Sea. So I know that some of their figures show North Sea OPEX coming down from over $30 a barrel to low 20s a barrel for 2016, which would be a great improvement, and really try and sort of rewrite the image of the North Sea, which has this notion of being high cost, expensive, even unprofitable area to operate fields. No longer the case. I think.
Hubs and all sorts of things, and shared
services, procurement, groups of companies. We've really been talking a lot to 4 or 5 other companies in the North Sea, roughly the same size as us, or at least the same size operations in the North Sea, getting together for shared services, as you say, and joint procurement activities. And that's costs, I would say, still heading downwards at the moment.
Good. I noted your results presentation, and you mentioned it briefly just now, that the E.ON acquisition was pretty good news and a good transaction at the bottom of the market. Anything to add to that? No, maybe with Tolmont in London.
All elements of it really have been proving up very well. Obviously we bought right at the bottom of the market there, and it was really the last piece of the upstream jigsaw that E.ON were selling, so I think we benefited from their situation, frankly. Production has been good, as I've mentioned. As you say, a Southern Gas Basin, not an area that Premier had been in historically. I think the Tolmount asset, the one you mentioned, which we now operate 50%, is one of the bright lights in the future of the North Sea. Probably something of a surprise to most industry watchers that a new project, which could be 600 or 700 BCF in the Southern Gas Basin, which is a fairly mature area. But it's looking very good. We're going through a lot of productive discussions with contractors at the moment, who of course are very keen for the work. And the government again has been very supportive as far as getting a new gas field going in the Southern Gas Basin there.
Excellent. I'd like to talk about Sea Line, which is important, given that I've got it as about a quarter of your production in 2022. Things must be looking up here. I mean, we've all got these significant cost reductions. It's a huge oil formation, and recently relations with the Argentine government appear to be taking away quite a lot of the political risk here. Are you ready for sanction? Are you? How are you?
Bluntly, we're not ready for sanction today, but we are working very hard, and the economics of the project are improving very significantly. We previously talked about break-even costs somewhere in the mid-50s. More recently, we're down to mid-40s. We've still got a lot of work to do in the FEED process, and all of this is before we actually go out to tender. So it's based on estimated costs at the moment. From everything that I see around the industry, I think there would be a very competitive tender process. As you say, the relationship between the UK and Argentinian governments has improved significantly. That's never really been a key factor in the project itself, but I think it is helping the service sector, who are always a little worried, particularly if they were active in Argentina. So all looking pretty good on the project. I think the cautionary note is just, of course, in the current volatile oil price environment, there are a lot of industry players still very nervous about sanctioning new projects.
Yeah.
We've always made it very clear that we'd like to bring in a partner. It's a very large project for Premier to take on. And until there's a little more confidence in the oil price in particular, there are a lot of projects of a similar shape to Sea Lion, 5 years away from cash flow, that are out there looking for partnership investment.
Yeah, but I imagine that the Argentine thing has probably brought a few more people to the table. But anyway, moving on, because time, we're getting... I must say that by the first week in October, I might have hoped that the bank negotiations might have been over by now. And I note that you made a release yesterday saying that the banks had further deferred the test on the covenants and so on. Should we be worried about this? Tell us,
no,
where are you on them?
I must say that I would agree with you. I'd rather hope that it was behind us as well. But we are still making very good progress. I mean, to put it in context, I think it is a full refinancing of the debt portfolio of the company. There are 5 different lending groups. That's 40 credit institutions and a number of public bond investors. And of course, getting those all onto the same term sheet, as it were, is taking some time, and substantial redocumentation of our existing facilities that lay behind that. So it's taking a while, I'm afraid, but the structure of the refinancing is all in place. We're into the nitty-gritty detail, and of course, as soon as we can get to an agreed position with all the different lending groups, then we'll be making, I think, an announcement. And that will put Premier in a place where debt portfolio is restructured and is giving us a runway for the next 4 or 5 years that we're very comfortable with.
And that runway won't mean that you'll be spending all your free cash flow paying money back. You'll have some opportunity to grow the business a bit.
We're working with the creditor groups. We have a scenario called the investment case, which, whilst debt reduction is still a priority, allows us selectively to make new investments for the longer term growth of the company.
Smashing. Just a quickie, I noticed that Petrofac have made an application to drill on 205 with the rig that Rob Trice is using on Lancaster at the moment. You have interest in the area. Is there anything particularly you would like to comment on?
Just to say really that our focus to date has been getting the Solan field itself up and running. That's now happening. One of the logics of making the Solan investment was always that infrastructure is fairly scarce in the area. There are a lot of oil and gas accumulations already there. It's encouraging to see possible new drilling going on as well. So in the longer term, certainly we would look for the Solan facilities to be third-party hosts for new fields as well.
Excellent. When I came to choose my bucket list for this year back in January, it was quite a leap of faith to put Premier in. I mean, not that I've ever had anything but faith in you, Tony, but it was a difficult time, as we discussed before. But 6 or 8 months on, your shares are at 240%. Admittedly, they were suspended at the time. Well, just come out of suspension, but your shareholders are obviously very pleased about that. Can you continue to deliver for shareholders like this? Do you talk to them a bit?
Absolutely. I mean, I've just completed something like 3 or 4 weeks, feels slightly longer actually, Malcolm, of roadshows both in the US and UK, Ireland, Scotland, etc. And I think, of course, people would like to see the dotted line on refinancing behind us, and I think that will probably boost our shares once we've got that out into the public domain. But also looking forward to next year, the Catcher project is going well. That will give us another step up in production. And we've got a whole series of new resources to be exploited after that. which will allow us to pick the best of those projects. You mentioned Tolmount and Sea Lion, and there are others as well. We're looking forward to the drilling in Mexico in the fourth quarter of next year, which is looking very good. So we're in good shape. Your faith in us was justified at the bottom. We were the poster child, arguably, of the oil price, and of course that meant that our shares were very depressed at the bottom. But hopefully we'll still be the poster child as the oil price recovers as well.
Sounds good. I mean, we've pretty much run out of time. That sounds like pretty much your vision. Is there anything that you would add in terms of where you'd like to see? You obviously mentioned pretty much all the things that you're doing, but I mean, anything you'd like to see if you can?
I think the key thing for the sector as a whole, as well as Premier, really, is choosing the best projects and having a number of different options to choose from. And whilst we need to get the balance sheet back in shape and Catcher on stream, that's going to be the focus in 2017. We'll have some good options to choose from come the next stage of investment for Premier after Catcher.
Thank you very much indeed. It's been my great pleasure to interview the CEO of Premier, Tony Durrant. Thank you very much for coming back again.
Pleasure.
Look forward to seeing you again soon.
Absolutely.
See you after the break.